Good morning, everyone. Good to see you all today. Welcome to the room. Happy Friday. It is Friday, April 21st, 2023. The morning session. We've seen quite a bit of back and forth price action here today on an option expiration Friday here. The overnight started right here, and you can see how we've seen a little bit back and forth, new highs, new lows, expanding range here on an intraday basis. And from an hourly perspective, up an hour, down an hour, back and forth within this range here. So a lot of chop. I did mention a bit ago here that the YM could get above that 34K level, things could get interesting to the upside as we make a move back up, perhaps toward 34,100, 34,150. As an easy upside finish target up there. Same thing could happen back up here, back toward the previous week's close. 150 here would be about weekly VWAP, maybe into 200 as this thing comes back. Again, that's been a very sticky level here so far this week. And again, this market doesn't appear to be eager for expansion just yet. I know this is something that it just seems like a broken record right here. But here we are within the range. That's the NQ. And we're still in this range, which is incredible to think about. But that's the range right there. Super narrow. What is this now? 18 days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days for the NQ. Everyone's a little different. But remember, you get up to 20, 21 days, and that's a full month. And I don't know if you can go back on the chart and see a month that's been this narrow in terms of total range in a very long time. Just 423 points of total range, and much of that was done in the first 2 days to set the range. You got a little bit higher here on that day, but that was about it. You come back down, you hit here, you're back up, over here, very similar day as to over here, and now you've been modestly down, but you're still within the range. We have not broken out of that range. We've talked about the significance of the edge here. 12,936 is the key range top. That level right there. There it is. The level just below it by 11 points is 12,925. That's this level right here, and that's the FOMC key level right there. And again, we got this range that is formed just above it. So this is about as perfect placement as you can get. But we need that reaction day. Once we get that big reaction day, we'll have a much better idea of what's going to happen out of this range. A reaction day, a bullish reaction day, could be one where we have a major stop run day down, but by the end of the day we've closed back above the range. That would suggest at least a return to the opposite edge and likely some sort of follow through to the upside. If it's to the downside, you may see this thing rally and then go outside day down for a stop run day down, something like that. And then you see this thing just continue to get crushed. So we need that big day. That day is going to be about a 200% of ADR day, is what we mentioned. And if you look at current ADR, so if we just put this on 1, today's average daily range would be about 190 points on a 10-day. 190 points. So right here, this is the developing. It was 190 yesterday to finish. Yesterday's 5 was 168. And you'll notice that from yesterday's close to where we currently are, it increased quite a bit. It's currently at about 196. Meanwhile, it increased while this range was low. and that's because it's dropping off probably this super teeny one and replacing it with this one, and you automatically get a bump. Meanwhile, the 5-period average is currently dropping at the moment. But basically, this is your range over the last 17 days, and you can see that this gray line has been almost perfectly flat during that time. It was higher, so it dipped down at the beginning portion of the range, but it's pretty much been flat the entire time. So let's just call it 200 points. A 200% of ADR day then is going to be a 400-point day. And that's what we mentioned yesterday. A 400-point day could be up ahead. Again, if it's to the downside, it may start with a failed new high. What if it hits 13.2 first and then drops that, 12.8, that'd be 400 points right there. Maybe it doesn't. Maybe it only gets 13.150. 13.150 minus 400, and you're looking at 750 down below. So that, one 400-point day will be 200% of ADR, and it would be a huge day that gets the volatility started for the next 2 to 3 weeks. And it could look something like what it looked like last time, where maybe the counter move happens, but then you also get a follow through afterwards. We'll see how it goes. But again, day over day, you're looking at this thing go from one side of the range back to the other, or up to one side of the range and back to the other. Today we started down, and right now we're getting a little bit of a bounce back up. The expectation maybe we could bounce back toward weekly VWAP or the previous week's close by the end of the week, by the end of the day. But we're basically not going to see expansion out of this range today. So not looking for a breakout to the downside. If it were to move and expand the range, it's more likely to do it higher, but not too far up. So that's kind of today's range, mostly expanding range. You can see right here, it's almost a perfectly expanding range, like this. There's your low, it gets it right here and bounces back. There's your high, takes out the high, then drops. There's your low, takes out the low and bounces. I mean, that's about a perfect expanding range as you can get. The NQ one has an expanding bottom and kind of a sloping top, so it's a different type of expanding range, but it's still very much along those lines. This one is also expanding here as well. Not as good at edges as the ES. And then the YM expanding, but kind of with an upward slope. However that looks. Maybe it hasn't gotten the low yet. So back and forth chop. And today's price action kind of so far illustrates the type of range we've had intraday overall. We've actually had active intraday moves, even some pre-market moves, but back and forth. I mean, to make that move multiple times, that's a 20-point move, 58 to 38, and you're doing it up, then down, then back up, and then before that you were moving as well. So that's quite a bit of movement here on an intraday basis, but no movement to speak of on a swing basis. So incredible how that happens sometimes. Right now, crude oil is one that could begin to see some weakness here come into play. It rallied quite a bit higher here, but couldn't stay above 78. So 78.02 is the previous session's midpoint. It's that level right there. And price shot through it, got to 78.40, then gave it up, and then right now we've just seen the retest and the lower high happen, and that could open the door to a return back to the previous session's close. That's going to be in about 60 to 75 cents down to between 77 and 77.14. we could be looking at a quick return back to this point up ahead. You look at this thing in a 60-minute time frame, and you'll notice, oh, well, we can do that one as well, but you'll notice how this has been a clean downtrending move, downtrending channel. We're at the upper end of the channel, and we may begin to go down and go grab that 75.70 level. Additionally, look at the market structure here, and then you have a clean market structure above it, and then you have a clean market structure above it, and you have a clean market structure above that. You know, we're basically right here before we drop to create new market structure, or right here before we drop. We're right here before we drop. And the rejection we just seen right now off the previous session's midpoint, 78.02, could be the beginning of at least a return back to break even on the day, if not a push to new lows to become an outright inverted check mark trend day down. So good spot right here for rejection. If we look at the daily chart here, one of the things we noted was again the morning strength today, the morning strength, and watching how it behaves at 78, looking for rejection at 78. If it gets through it, then looking at a trap. Previous session's low is right here, so it came up to that point and then failed back below 78. But you're leaving behind 79s. That was the key level early on. The failure at 82, 81.5. And then you have the reversal right up here near the 200-day moving average and at the FOMC, and it's been a steady drop. This is the biggest move to the downside we've seen since that big rally that's transpired in part to news to get it to go higher. So it's a big wave, and it looks along the lines of what we've seen it can do here before. So to get this thing to pull back after yesterday here and see some weakness here, can we finish the day back at break even or lower, create a red body, and now we finish into next week into that gap. This is the gap right there. You know, it gapped up to here, and that's where it failed. That was the midpoint on this day, and now the gap fill takes you from there to here. That black dotted line, which is also the previous quarter's close as well. So if we change these over from yearly, because right now it just took out the previous year's close, 80.50, which has been a sticky level. But if we look at the quarterly chart here, the rejection comes in right at the previous quarter's highs, and if you're going to reject the high, you return to the close, 75.70, and that's the gap fill. And if you go through that level, then the midpoint is here, and if you fail at the mid, the low is here. So this rejection not only takes us back to the close, but may take us all the way back to the previous midpoint as well, which is near the bottom of the range. So a move to 73.50 could be the next stop up ahead at the very least, based off of quarterly pivots. So the quarterly pivots came into play very nicely here. Again, you can see how price rallied, hit this zone here, fell back below the quarterly high. This was one digestive day and a squat day, and then right there took it offered, breakdown of the 82, 81.5 zone, another digestive day, another stop run day, another continuation and squat. I mean, it's just been heavy. So good move right here, great continuation. We're at the spot in the chart right now where some selling pressure could pick up on this lower high. And it looks like it's actually making a run for it here. You can see right there starting to turn down quite a bit off that upper boundary we just talked about. Another turn down from the upper end of the range here. across the board. So it looks like we're getting some selling pressure. It looks like another round of weakness back within the range. So heavy returns back and forth. Fade new highs, fade new lows right now. But this crude oil chart picking up some steam. Talking about it at the right time here. That lower high opening the door to this weakness. We're looking for 77 to 77.14 as a quick target, and then going negative on the day beyond that. So we'll see how that continues to play out there, but a very good initial move underway. Now looking at the 60-minute charts, yeah, breakout range expansion likely or not. Yeah, so looking at these charts right here, there's a clear downward bias right now since Tuesday's high. Tuesday high, we had those box reversals right across the board. This was a strong rejection. Let me change this over to RTY. There it goes right there. So another box reversal here, rejection, box reversal. And since then, it's been a downward trend. Lower highs day over day for the most part. Lower lows, even though it wasn't really getting anywhere. So there is a downward bias clearly here. And if it were to break, again, it's likely downward within the range. I thought, again, if it's going to stay within this upper portion here, there's a shot to just come back to magnet. So I really didn't think we would see tremendous expansion. But this is the spot in the chart where you fail here, there's nothing else left for a while. But we are coming up to yesterday's low here. We'll see how that goes. These sell signals look really good. And we've had a series of sell signals here lately, but at the same time, they're sell signals within range, which can be difficult at times. RTY looks like it's starting to break through the previous week's midpoint. So, nothing surprises me right now. But we've had very few directionally bullish or bearish days. Very few of them lately, which means we haven't stayed bearish all day long, or we haven't stayed bullish all day long. It's been, one way early, one way the next way later on. One way down, then one way back up. Or one way down, then one way back up and down. This was one very bullish day right here. Other than that, it's been back and forth, and back, and then today's been back, forth. So we just haven't really seen a whole lot of directional conviction. That's why I hesitate to say that, yeah, we're going to break out and just remain in one direction the rest of the day. We just haven't seen that. The short-term moves have been where it's at lately. Thank you for posting some of those almanac ideas, JP. The sell in May and go away signal hasn't quite fired here based off of the MACD crossover on the S&P and the Dow, which you stated a little bit earlier. But it's getting close. It's getting close. And it's funny that you mentioned that again, because yesterday, I think it was the first day that my mind went to sell in May and go away. Like popped in, and it might be just that seasonal alarm that pops into the mind every once in a while. But we've gone from early April to now late April, and we're just a week or plus out from switching to May, and that sell in May and go away may really come into play this time around, especially given the strength we've seen early on, given kind of the overvalued situation we have going on. And it's overvalued by multiple metrics. You know, this would be considered one full standard deviation above value right now just for the ES. And then when you look at last year's finishing value, we're above that as well. So we're above value not only on a year-to-date basis, but over a finishing yearly basis last time. That's just the ES. Obviously, if you look at the NQ, this thing's been far outpacing the broader market. But here's your finishing value for last year. Here's current value. You're way up here. But you know, again, how's this gonna behave moving backwards? It could just be a return to lower value and remain in the uptrend, or continue to build this right edge. You know, we haven't really seen that type of selling pressure come in. I know based off of what we're seeing here, we could theoretically, you know, start to pick up some of that, but man, we just haven't seen it in a long while. The rotations have been smaller and smaller. You know, here, this was the last big one, and after that, very small. This was a moderate one here in a couple of waves, but very bullish, and here we are. So it's going to be interesting to see how this thing plays out up ahead. Regarding that, yeah, great point there. Sell in May and go away does not mean necessarily go short, just stand aside. Very good point there. One of the things we've been looking at is a little bit of seasonality here with crude oil, and we can pop up the seasonality here. ES right now sitting right at the previous session's low, within a small range. So on this is a 5-year basis, right? So this is super recent. This is the beginning of May there. This is what you have here. That's basically marked up right there, and you got a push down and then a push up. This is the move that we've seen here lately over the last 5 years, even though last year was a little bit rougher. So that's that move, right? We smooth it out a little bit over here and say, okay, let's look at the 10-year look back. And the 10-year looks like this. Again, this is for the ES. Very similar price action over a 10-year look back, and then finally we'll go back to 20 years, and this one overlays a little differently, but basically there's your May. This is basically beginning of June, and you still have kind of a check mark deal there. So that's kind of odd that it looks that way on all these time frames. I'd imagine it'd look a little bit more different, but that's kind of the averages we have for this one. Let's see what the YM says here. $20-year daily chart. Beginning of May. Is that the end of May? Somewhere in there. Again, kind of a check mark. So the early pullback comes in here. This one can always be a tricky one. You know, is it late May? How does that play out leading into a summer? We talk about the August low, or perhaps the October low. One of those two can be a great entry point for a year-end rally during most years. That's one thing that can play out. So this will be interesting to see how this one responds, but right here it shows early pullback and late follow through lately. So right now, and again, you don't want to judge a daily bar too early in the day, especially if it's a range bound day, because right now it looks very bearish. You've seen the early rally, it got dropped, you're now on lows here, you're very close to maybe breaking down. But if you would have looked 20 or 30 minutes ago, it would have been at the high of the day and would have been a full-bodied, you know, bullish candle instead. So it's chopping back and forth up here. It's clearly inside the bullish Pima trigger zone. It's trying to hold the December FOMC key level right now. YM remains the one that I thought was the most bullish. We talked about it here and was hopeful that we'd get some semblance of a pullback so that we can race toward 34,500. We never got that pullback, and we've come just shy of reaching 34,500 by a couple of hundred points. So do we still go get that up ahead, or are we going to start failing here? Because kind of like crude oil, you got this market structure here, and if you start to fail here at 33,800, it's going to open up a return back to the bottom of this range and maybe start to open up more weakness. That's what happened with crude oil. This is more days. So this is going to be interesting here to see how that develops. I did want to show real quickly VTI. I did want to show VTI here. Let's look at the weekly chart. So this is the weekly chart of VTI. I do have this channel that we've had on here for a long time. Remember, this channel initially was down here, you know, something like this, and over time here it's continued to adjust the regression line channel. But right now we're up here at this edge, and typically speaking, you know, when you get to the counter trend edge, you are most of the time thinking about a fade, right? Most of the time. And if you look here and you get up here to the counter trend edge, or up here, you're just thinking fade, fade, fade. And then when you get down to the other end, down here, you're thinking, okay, this is the spot that you bounce, you know. So right here, this is a tricky spot because again, you naturally, at least in my mind, you're thinking fade it back down. This is after a strong lower low failure and you've had a series of higher lows now. You know, is this thing going to actually try to make a run for it to the upside? Or does this set up kind of the ultimate follow through to the downside? You know, when you have a channel trending like this and you get that soft lower trend line, that's the one to break that really opens up the downside ahead. So when you look at this ETF, again, it's the Vanguard Total Stock Market ETF that JP brought to us here, VTI, which basically when you look at the ETF and its holdings, you're looking at an ETF that basically owns a little piece of almost every major stock out there. And not like big percentages. I mean, it's like, you know, 0.5%, 0.5%, 0.5%, 0.5%, 0.5%, 1/4%. You know, only a few, if at all, have anything above 1%. So it holds a little piece of everything, and it's kind of a total view of the market. Whereas if you're looking at tech right now, tech is up here somewhere. If you're looking at RTY, RTY is somewhere down here in a range. If you're looking at the YM, you're up here. ES is some. This thing right here gives you kind of a total view of everything in that way, and it's at a spot in the chart that's very curious and ominous here. The first test at the previous year's midpoint was already offered. 2 tests at the previous year's close were bid. This is the range. And which way we're going to go out of it. If it's to the upside, you have free space here up toward the previous year's high. You don't do it all at once. You make it in moves. But if it rejects here again, we come back to here, but now do we also finally break down and get the low? And how far through the low do we go? I think, again, it's still hard not to see that as being still the predominant move or thought for the move ahead if the trend remains as it is. The trend is still down, but we are at a point where we are so compressed within this range, which is now nearly 1 full year in the making. This thing started last May, and here we are 1 week from finishing April. To be 1 full year in here, that is a tremendous compression. And it's one that's also reflected in the ES in this time frame as well. That's the ES right there, and there's your range. So man, which way is it going to be out of here? If it's going to be up to the upside, it needs to be a tremendous lift-off day. It needs to be a lift-off week that takes you way up, and that would easily take you to the previous year's high of 4,800, and the back end of this range would actually suggest a move to 5,000. From the breakout point, 4,200 plus 8 gets you 5,000. 42 plus 6 gets you the edge. And again, this type of long form compression has just been very rare in today's markets. Today's markets being any time over the last 10 years. You can just look at the charts here. 2016 was a trend up. 2017 was a trend up. 2018 was a range-bound year with a big-time pullback and then an uptrend. Then the COVID pullback, then an uptrend, then an uptrend. Now we're had a downtrend, but now a year's worth of compression that is the size of anything, as big as anything going backwards in a long while. Again, this is very 2004, 2005 look and feel of those long form compressions, or even before that, which you have to go way far back to even see that. So the results of this move that come could be significant, but when it's that large, you could be stuck waiting for a while before you get that move. It's tough here. But man, if it breaks to the upside, you have a clear path to the highs and then some. 5,000 would be that level. Based on the yearly pivots, the 25% level would be 51.35. And right now we're stuck at the midpoint of last year's range, precise midpoint. Low, the high, that's the midpoint. Are we making a move to this one, or are we going to make a move to this one? Which one's more likely? Again, I contend that if we did make that move to the bottom, this could be a tremendous opportunity to buy it. Tremendous, because you tend to snap back to where it came from. But then ultimately there could be, you know, a continuation across the other edge as well if this is the larger D shape that we're playing within. So big potential movement to come. Right now, very range bound and unlikely to see any major expansion just yet, especially on a Friday, especially on an options expiration Friday. And right now, let's see where we are here. We're bouncing back up within the range. NQ, gosh. The NQ's all over the place. Not my favorite style of craziness here. This is pretty active wildness. So you definitely want to be very nimble, or you know, just take what you can get if you get in on a favorable extreme. What I love about a day like today is that you're looking for fading of the new highs or fading of the new lows, right? So you're looking, if it reaches that beyond that prior level, you're looking for a snapback. It can get close and then, you know, fail back below, but I mean, again, it gives you great trade location on where to look. The thing about such wild moves here is, again, you just want to be disciplined about being at the edge, and being a weak hand if it fails there. But for the most part, you know, fading it back to value is a quick move on a day like today. And right now, ES, NQ, YM getting some really good fades. Crude oil here with a little bit of a bounce. Nearly got the downside target here before bouncing. 77.31 on the low. Yeah, good point there, JP, regarding the premium here with 1 or 2 days to expiration. I've been seeing some of that as well, and that's why I was going short expiration on that NQ. And also, you know, I was playing with a couple of very short dates and was really impressed with the amount of premium that was there. It was making the shorter dates so much more competitive, even more, just more of a better value there than the farther dated stuff. But yeah, it's funny you mentioned, yeah, it's probably is going to be about the time where you get used to this style market, where it finally breaks out. Vito must be doing really well with the NQ there. This thing is moving points. So a little bit earlier I did mention Wells Fargo. This is an interesting one right here. Obviously, these bank stocks got hit. Regional banks still, by comparison, though, are stuck down here in this range by comparison. Just for a quick look at something like KRE. And there it is. You know, you got that much more severe drop, and you're still stuck at the lows. Whereas Wells Fargo got hit, but bounced off of a very good area of interest, the previous low there. Higher low and go. And it forced a push back above this $40 level right there. And $40 been a good pivot in this chart. You bring it back this way. You can see how it formed this range here below it, but got back above it and squeezed back to 46.50. Came back to it, bounced off 40, squeezed back to 48s. Came back to it, squeezed even higher back to 49s. And now it dropped below it just like it did back here, and then squeezing back above like it did this day. And did so in a very solid fashion. Today, big time selling pressure this morning, but quickly turned into a V reversal quickly. So a quick double bottom and a turnaround, and now you're holding here at 40 with maybe a shot to rally back to 46 at value. And if this pattern remains the same, maybe this thing actually goes a little bit higher and hits 50 this time. So, you know, right now it might be a 40 to as much as 45 up, 50 up ahead, and then you have the 46 VPOC level there that could be in play. So this one looks like it may try to make a move here to the upside. Again, today's rejection off the lows looks the part. Looks the part. Oh, P&G. Yeah, I saw that this morning on the biggest winner scan, biggest gainer scan. Popping higher, earnings, dividend. This one beat by about 6 cents and then popped. When I look at this chart, though, it's kind of unorganized to me. It looks kind of, it looks a little wild. The market structure looks a little, instead of organized, it looks a little unorganized. It just looks all over. It just, this one's hard to work with. But a very strong move here lately. And based off the pivots here, yearly pivots, you're back above the previous close, which the only level left above is going to be this high down the road. Well, this was great. I mean, you know, popping back perhaps above that mid and going higher. But when I look at it, it you know, nothing. Any level that stands out kind of gets. It's a little messy. Now, one that we were interested in yesterday was Tesla. This one sat at that 165 level throughout the entire session. It did get a little lower, got to about 160.5, but still kind of pulled back. Ended up being a squat day. So much volume here, especially after the gap. Today, inside day. Narrow range, inside day. And still sitting right at that edge. So this is, it's an important spot here. Previous month's low, it's the lows back here. And so this could be one of those that tries to make the move back up to fill the gap and return up the range? Or does it begin a pattern of selling pressure that leads you to fill the gap down below, followed by returning to break even on the year? And if so, what would that mean for the broader market? You know, is this just a Tesla thing, or do we start to see a pattern of selling pressure that spills over into the market? And yes, great point there, Dwayne, regarding the bracket trade idea that Dale used to employ. And this is a perfect candidate for it. You're exactly right. This is a perfect candidate for it. The breakout, the bracket trade would be after a gap of a certain magnitude. It had to be a gap of a certain magnitude, but not a gap of too much magnitude. And this kind of falls in that category. This is a solid gap down, but it's not a clown-sized gap down. It's a perfect sized, enough of a gap to warrant a bracket trade. Bracket trade, basically, you'd put the high and low around the day that it gapped down, and now if it begins to close outside the top, you would take it long to go fill the gap or longer. And if it were to break down out of that range, then you take it short for a continuation. This would be a similar one over here where it gaps up and the next day it breaks out through the top and you keep it long. So it's a bracket trade idea, and today fits perfectly because yesterday again was a perfect size gap with a perfect size range for it. Because again, this idea doesn't work if, say, you gap down and then you get some big sell-off that same day. Now you have such a huge range that the bracket doesn't really work. That's why this one works so good. That's why, as Dwayne mentions here, this one's setting up for that now. It's a good size range, it's a good size gap. It's right at a perfect level, so it's a pivot where you can see this thing filling or expanding. And then you have today as an inside day right there. And so, again, if you are to take a trade like that and you don't know which way we might go, you could still set up the option strategy for it in either direction. For example, if it breaks to the upside 170 here, then how are you going to approach that trade? Which ones are you going to use? Are you going to buy the 175 call spread? Are you going to sell a put spread? Which strikes are you going to use? You can already have that set up. Same thing over here, the 160 on the downside. If it fails through here, what are we doing? Again, I usually like to be selling in the money spread one way or another. But you could also be looking at an out of money idea as well if you're buying, however the case might be. For example, if we're going to push through 170, I might look to buy the 175 180 call spread and let this thing go get some to the upside. So just some thoughts right there, but I think you're right on, Dwayne. This one is setting up very nicely for a bracket. I keep wanting to say breakout, but bracket trade idea, which would be a breakout up ahead. If it is back up off this range, I mean, it is really milking the upper distribution of this downward channel. At what point do we make a move down across the range, if at all? It's going to be interesting here. That's a good one. Now, I was reviewing some of the early ideas we had last week with regards to the Friday candidates. Right here, this is a sell candidate we had last week. This is DK. And this one's turned out perhaps the best here this week. So again, this is a weekly chart, so ideally you want this bar to be as bearish as possible. If we had a sell candidate last week. So last week on a Friday we had this wick reversal which rejected value, year-to-date VWAP, and it rejected the previous year's the previous year's midpoint, which should take us back toward recent lows, if not try to push us another step closer to the previous year's low. So a modest pullback to begin the week, just ever so slightly from the open, and then it just slammed downward. Very good move right there. And a nice continuation to the downside this week. Another one we had as a sell candidate was 5 below. Now 5 below was a higher high failure. Higher high failure. Great wick reversal rejection. Good size and good placement right at the previous year's high. Again, a good little pullback this week. Remember, I was looking for 209, 210, and it got to 207s. 207.76, so it got a little bit higher. I was looking for a little bit higher before, and I wasn't even looking for a midpoint, just a little bit higher. And then from there it sold off, hit a low, which is the midpoint of the month. And since it hit that low of 197 halves, it's bounced a little bit here into the end of the week. But a very good move on a first move basis. It's currently still below the midpoint for the week, which again suggests that any pullback could still be sold up ahead. But the level that needs to be taken out is clearly this midpoint. We've been stair-stepping up. And if you break that level, you open up even more weakness. So the two stocks that we had have continued to play out to the downside here this week. We are in a very, very bullish trend. So again, not to overstay the welcome to the downside if this thing starts to bounce. Another one we had as a sell candidate was gold and GLD. Here's your weekly chart of gold with a strong reaction last week. Again, noting that this was a good enough rejection, but not the strongest by any means. You know, back here, all of these were much bigger, stronger rejections than this one was, but this one fit the bill enough, and it was close enough to the edge, knowing that the last time it also fell short of that high as it did this time. So good enough. So how was price going to respond on the first bounce? And the first bounce toward the midpoint was rejected, and now we've seen lower highs, lower lows, lower close, lower midpoints, and again that this could open the door to more weakness up ahead. So again, from a 1 week later perspective, GC here showing some weakness here from last week's highs. GLD doing the same. Nice movement there. We also had RTY and IWM as sell candidates last week. This one has been the least bearish so far, but still has done quite well. The failed new high was perfect placement if there ever was any. 1825 was the level we talked about as being the level to reject, unless we got a stop run through it, and if we did, it needed to be huge. But 1825, and the high this week was 25 half. Failed new high, turned down, went right to the previous week's midpoint. That's about as good as it gets for a trading range. The rest would be failing through that midpoint and dropping to the other edge. We just didn't do that this week. It was just an upper half of last week's range type of week. But we are getting closer to the potential for a break one way or another. Is it through 1825s here? That pivot's going to be very good. Or do we drop further down? So down from the highs of the week, not quite as bearish as some of the other candidates that we had on the board, but not bad either. So that's what we had here going into this week. Took a little while for things to really get going, but not bad ultimately here, given the fact that we're mostly range bound. Mostly range bound. Yeah, I hadn't heard from Dale in a while. He had his hands in lots of different pots out there, so very busy out there, and you know, a different pace of life too out there in Maine. So he was very, very good dude, as you say, good artist. I have one of his photos hanging up on my wall here that he gifted me years back. And let me see. I think it's called In Solitude or Solitude. And it's basically kind of a shrimp boat out on the water in the fog, so you really don't see anything. You barely see the water, and then there's one little black duck in the foreground. And it's a great photo, and I think he said it won a photography entry contest. But yeah, very good eye. Had a bed and breakfast out there on a little island, Swan Island, off the coast of Maine. Plus an art studio and things of that nature. So photography, he did. I think he photographed Civil War memorials, war memorials, things like that. Yeah, there you go. I think he was a photographer of record for some of these historical sites as well, which is really cool. Oh, see, there you go. He's got the old school well, I don't even know what to call that. It's a camera, but I mean it has like the accordion look to it. Swan's Island, there it is. Yeah, pretty cool. Oh, is that what was it? Yeah, that sounds about right. He was selected to use vintage equipment to photograph a Civil War reenactment. Yeah, yeah. All right. Um, Going through some of the scans here, sometimes again on a Friday. I tend to look at some weekly scans later on. Also like to look at some scans like this one that we talked about before, the body percent indicator scan. This is an indicator that measures the body of a given range for the day. You know, so the body is the open to the close versus the high to low range, and what that means over time. And I never, you know, the correlation of what happens and why is kind of weird with this thing. Sometimes, you know, you just don't know. It's one of those things where I built an indicator. I put it through its data paces and just looked at what the results were and saw that there was something there in terms of forecasting movement up ahead. Don't know why, but it just kind of does. And so what that means is when this body percent, the average body percent, drops below this red line, that red line being a user-defined red line, but it's also because I can change that line if I want. I can double-click this right here and go, okay, let's look at 30. You know, and I update it. It's going to spit out new results. But you'll notice it doesn't get below 30 very often. And what we're looking at is this aqua line. Does that dip below 30? You know, maybe here, does there for sure. But other than that, it doesn't do it very often. So the data suggests, okay, 35 is a great cutoff. And you can see the activity there. But what about if it was 40? Or, you know, even higher, 45? What does that do? And maybe it's too much and doesn't really tell us as much. So it's looking at the data and saying, okay, this is the spot. But then what happens when you see it? You see this, the average average body range drops and drops below that 35% threshold, meaning that the average body range over how many days? You know, in this case 10 days, is less than a third of the day's range, right? When it does that, it's kind of a warm-up period to a potential breakout move to come. And then on that day, where you have some day that pushes your body percentage from below 35 back above it, it's usually a signal of, okay, the market's ready to now move, and you see some movement come. It's not always perfectly, you know, in this way, but it's something like that where a body percentage of about a third or below is an indication of indecision. And once that body percentage starts to go back above 35, you see more directional conviction and higher body percentage days. So that's why something like this can work, right? And so, again, it's not always perfect in terms of, you know, just because it turns from pink to blue, now it's ready to move immediately, but it can happen that way. You know, it can go from pink to blue, and now you get this impulsive move down and the responsive bounce. You know, and it's like, okay, I'll take it. Or it goes right here, and you get this move, and you get more action. But again, with something like this, it can be a little bit more difficult because you don't have the rejection day. Like, you know, today is turning blue from pink, which is good. But is it one of these days where it still needs, you know, that rejection day or that series of days to get the party started? You know, over here it turned from pink to blue, and then the next day, you know, getting started the whole process. So some movement may be coming. So the scan for this would be, give me the candidates that are changing from pink to blue, but also add maybe 2 or 3 days. And so that's what we're seeing right now. That's DE. Maybe we get some movement there. Up ahead. This one right here is MasterCard switching from pink to blue yesterday, and today's the first day afterwards. This one's been interesting. You had pink to blue here today. Over here it was there, but we've been within this range. Here to there, and we've been within this range. So stuck in a range here. Actually, that's a very curious range for Boeing in general. Super narrow, and it's the entire year so far. That's wild. You know, you got this low of the year, you got that high of the year, and that is your range for the year. Whereas Q4, for Q4, you had a range from here to there. That was your range just last quarter, or rather in Q4. So far this year, which is Q1 plus a month, we've gotten just this. That's kind of wild how compressed that is for Boeing here. You got to think something's coming out of that. Is this a reaccumulation phase? Is it a distribution phase? That's incredible. Yeah, I think so too. If that's profit taking, then that would be distribution. We were just talking about FedEx pre-market, or a little bit earlier, maybe after the market open. This range right here, how compressed it is. That's a 12-day narrow range. It is so super teeny tiny, and it's basically traded right on top of last month's high and close. It's just been stuck. So are we going to see some sort of breakout from this range sooner than later? Which way? Everything's been trending up here for this one. It's been very bullish. So hard to buck the trend. You know, you're trending up. So this might be a counter trend bounce or pullback followed by what is a primary trend bounce to the upside. So even if we break down, this might be one of those ones that you're able to pick up. You know, like right here, we're up here at this compression just like we are here. Ultimately, we may pull back and then you pick it up. So FedEx right here, super compressed. We'll see what that brings down the road. Here's Apple real quick. Apple has been very bullish, especially to begin the year. The trend has been super strong. You are coming into earnings coming up on the 4th. But we're at a spot in the chart here where, again, we're not really at an edge. You know, I've had 165 as a key level, but that's kind of an older key level now, and we have some really wild action around it. 150 is the level below it. So that's 15 points. You go 15 points higher, it's 180. So you're kind of right there. What are we going to do next? Obviously, from these highs, it's been lower and lower ever since. Right now, we're still down here, but this trend has been so super strong. What's it going to take to break that to the downside? Over here in Q3, we got perhaps what could be viewed as an even stronger trend to the upside. You can see the slope of this line versus this line, and it still failed and ultimately went to a new low. So, you know, do we get at least a pullback to 150? Does it lead to a move even below that? How does this work? So it's been very strong up here. Last time when we started the move down, it started with kind of a heavy selling pressure. The next morning it gapped down. This was an inflation data day, so it went outside day down with a huge high range sell-off. Again, it's going to take something like that type of day to get things going here up ahead. But this one sitting right at that 165, and you either have 15 points back to 150 or 15 points to 180 up ahead. It's right at the level right now. Yeah, so right now range bound, options expiration day, a lot of chop, and ES sitting right at VWAP. So is RTY. Again, look to avoid the chop. Can fade the edges for a quick return back to value, but we're still in the ranges. Still got to be a bit cautious about fading edges and also looking to take a quick profit here, especially as we head into the weekend and into the end of the day here. Don't want to get chopped up on a Friday options expiration day. All right, everyone, I'm going to go ahead and call it a morning on the mic. Everyone have a fantastic rest of your morning, and I'll see you in the room. Take care.